rockets out there. So give God thanks and praise for another gorgeous day. Today is Tuesday, my best day of the week, which I love so much. But I have to revert to love my Mondays and then my Tuesday. So we give God praise and thanks. We thank God for this segment of Great Way Finances. We come here today to talk about money matters. And we are in Canada talking about money matters. So if you're here and your note text is in Canada, I'm not nowhere else. I'm right here in Canada. You can tune in to us today on our Facebook page. I know some of you already listening on the Radio Land. I love Radio Land. So we're going to tune in today on the Facebook page and come in and sit, ask questions. Find out what are we talking about and why are we talking so much about money. Money is a good thing, but so sad it cannot buy happiness. It cannot buy peace of mind. But one thing it can do for sure is to take our children to school. For certain. It may not give them the education that they need, but it will give them a developed mind because they will be in a place where their consciousness is going to come alive and say, well, I'm in school. What is she talking about? That can get them to be very smart. They can be doctors and lawyers and politicians. And the reason why I say politicians is because the government is resting on the shoulders of God. So if we as believers get into that realm and understand politics and what it's all about, we make it a little easier for the Lord Jesus Christ. Yes? So let's today do for our children what we did not get for ourselves. Remember, education is the key to succeed. Without knowledge, you will perish. I turn over now to Timothy, and he will talk more about money matters. I'm not good in that field, so I wouldn't talk about it because I would make a lot of blunders. But what I'm very good at is the Word of God. So I'm going to turn you back to Timothy, and he's going to take you through money matters. I love you. This is Tex Manwaran on Great Way Finances.
Hello.
Hi.
Yeah, good afternoon. I know you're ramping up gradually. As Mr. John said, we are ramping up on the finances and literacy, financial literacy as well. So probably you will start taking over the session and say, hey, I think I have something to say today. Yeah, we give God the glory and we thank God again for the opportunity to be on this show. It's always a great pleasure to come and share with the family. And we pray that God will continue to help every one of us, will give us the understanding, will give us the knowledge, will give us the faith, the strength and the grace as well. In Jesus' name. So as text I've said about what we do in this session, we have the session every Tuesday and Friday, 12 to 1 p.m. And all what we just want to share with you is we want to share with you different strategy, financial strategies that you can apply if you're in Canada, if you're in any part of the world, basically because we share a lot of very important information, right? One of that kind of information is that simple things that you might not really, keep in mind sometimes. But for example, we want you to save as much as you can save, right? Today, and why are we encouraging ourselves to save is because we want to save for the future, right? We want to be able to build a stronger future, as she said, I might be a parent here. I might, say, okay, this is what I can do for myself, but we definitely know that we can always do more for our kids, for that next generation. We can prepare them, to be anything that they want to be. But beyond that, beyond going to the formal world of education, or any formal setting of education, they need to know a lot about finances, right? They need to understand a lot about how they can make much more out of life by understanding some simple money rules, right, that we can inculcate into the children. So that is what we do here. My name is Timothy. Once again, Timothy, and we are always open to your feedback and to your questions and to your requests. If you need anything, any specific topic to be shared, we have our own kind of schedule that we are putting together here and there and modifying and adjusting as needed, but we would like to definitely speak directly to your need. Okay. The other thing is that if you have any question, you can feel free to set up a time with us. Just reach out to us. Just say, okay, I want to ask you something just within 15 minutes. You can give us a call. Hello, and just say your question and we'll point you in the right direction. If we do believe strongly that there's something that you need, or there are some specific information we need to share with you that will guide you to making the right choice, we are going to definitely recommend those to you as well. And these are non-obligatory. We are independent financial educators. So we have relationship with the banks, we have relationship with the trust companies, we have relationship with the investment companies, we have relationship with the insurance company, we have relationship with the credit union society. However, we are not captive. We are not entangled with any of them. Okay. Our relationship is purely based on we give you the best solution, that suits your need. Okay. So last week or last Friday, we started on one of the interesting area of financial education, which has to do with real estate. And sincerely, in Canada, where we are today, statistics have shown that more and more people, okay, have become more aware of real estate and why they need to know more about real estate and why they need to do more about real estate. This statistics is really, I have not seen any number out there yet. Probably by this year, we'll get a number. But I think in my mind, I'm going to say that almost everybody in this part of the world now are more aware about real estate because they have been impacted by one way or the other, right? What does that mean? If you have investment in real estate, you would have discovered in the past year of this type of significant growth you have enjoyed on your investment, right? If you were planning to get more real estate or you are trying to go into real estate and buy one, you would have discovered how much money, and how much commitments that you need to make in order to be able to get into the market. And if you were still thinking about it, you would have began and started hearing more about why it is important, because it is a very, very fantastic investment that you can use, today, that is highly recommended. You just need to have enough education. You don't still do it anyhow. You have to be very strategic about the investment and how you leverage other people as well. The key word in investing in real estate is leverage. And one of the reasons is that if you have $100,000 today and you go and buy a house of $100,000, then yes, that house might be an investment, but you are not leveraging. But today in Canada, probably if you want to buy a house of $100,000, which I don't think exists, I'm just using it as an example, then probably if you have 10% of that or even 5% of that. So let's say it is a real estate or property of $500,000. then 5% of 500,000 is 25,000. So with 25,000, you can easily, buy that house of 500,000. That is leverage. Okay. So because that house is appreciating at the, probably even if it is appreciating at the rate of 5%, which is very minimal. But let me just put, if the house you bought with the $25,000 down and is appreciating by 5% every year, okay, the current average increase according to the statistics as at February is between 17% and 25% thereabout, depending on the city. But let's even use 5%. It means that the house will have appreciated by 25,000 after 1 year. So you see the leverage. So within 5 years, your house have appreciated by 25,000 times 5, which is 125,000, and you bought it with 25,000 down payment. You see, that is leverage. So that is why it's really, really, important to understand a lot about real estate. We are open to talk to you anytime. We talked about our company that has given us the platform to share this information with you, Greatway Financial. We are very much interested in the financial future of our families, right? So when it comes to protecting your family, when it comes to preparing for your retirement, when it comes to investment, and when it comes to even investment in real estate, our company is always there. We have all the platform, we have all the opportunity to provide you with the right education, right? So we look forward to seeing you and talking to you one-on-one. But what do we have for you on this show today? We want to talk about real estate investing. Ask me any question here or on the platform. We want to continue the introduction part of investing in real estate. We said it's a long topic. It may even take us this whole year to talk about it, but we just started an introduction last week in our last session, and we started talking about this beautiful topic. So let's share. And one of the important things I wanted to mention as a recap, okay, we'll appreciate if you can give me the ability to share. So one of the important things we talked about during our last session, just as a quick recap, is we can all invest in real estate, right? And everybody say, are you sure I can invest? I don't really have money. Well, you might have even heard it. Somebody said that you don't need money to invest in real estate. And that word is absolutely correct. But that doesn't mean that you don't really need money, but you don't really need to use your own money. That's what it means. Okay. And because of leverage, you can still benefit from it, right? You can still be a real estate investor, and there are different options to doing that. Okay. But most importantly, we wanted to share with you the fact that investment in real estate, like every other investment types, depends on your risk appetite. Okay, so you must always tailor your needs, according to your risk appetite, right? Let me give you an example. One form of real estate investment is you having a house of your own and you creating a separate apartment, like a basement, what they call a big basement. So a basement is an apartment if you legalize it. That is, you go to the city and you tell them, I want somebody to occupy this apartment legally. It meets all your codes, it meets all your standards, right? So that legal apartment is a form of investment for you, right? So, and some people are just comfortable doing that, right? So if you are comfortable doing that, then do it, right? There is no anything. But some people are comfortable, buying multiple houses and, having people rent it out. If you do that, then you must be able to deal with tenants, right? Even outside of your location, right? So we believe strongly that most people will invest in real estate if they actually have the right education, right? And that is what our company is all about, right? We want to give you all the fundamentals. We want to give you a very step-by-step guide to how you can achieve your real estate investment need. So we will get started today, but before we start, as usual, we will be doing this presentation to give you a general understanding of financial concept, investment, retirement planning, and well-building preservation information. These are all we are telling you. If you buy a house today and, after you have lived for so many years, maybe 150, I don't know whether techs want to get up to 200 years, but at some point in time, the property you have will move to your children, So that is why all the information we are providing you is just for you. You want to build or preserve wealth, and you can always understand this information and make the right decision that fits your need, okay, and your financial goal. Yeah, right. That is our goal. We do not intend to give you any specific advice on taxes, but specific advice that will give you the information, you ask more questions, and then we'll point you in the right direction. Okay. When we ramp up our investment, real estate investment discussion last week, we talked about a favorite quote that happened to fall in the second aspect of our introduction, which is a statement by one of the industrial billionaire, Quarry and Co. It says that investing in real estate is actually simple, but it is not an easy endeavor. What does this mean? This means that what we actually need to do is, if you buy real estate for 500,000 today, you leave it for 5 years, it's a no-brainer. It's going to appreciate. And then let's say at that time is now what, 600,000, you sell it off, you get 100,000. It's that simple. However, there are a lot of things that has to be done. There are a lot of things that you have to know. For example, if you want to sell that house in the next 6 years or 5 years, do you think that there's something that you can do that can make that house that you bought 5 years ago to worth more money, to give it more value, right? Then a real estate investor can tell you more about that. Do you want to take out money from that house which you bought 5 years ago and take out the money to do more other things? Then probably a financial expert will tell you that, right? So that is why it isn't easy and you need the right set of people to your side. Okay. How do you get started? Well, just as an overall idea of what we mentioned here last week, you need to have some knowledge about the markets you are investing in. Okay. For example, very straightforward example, everybody knows, Toronto homes in downtown Toronto are actually more expensive. Even if you ask a 5-day-old baby that question, they will say, yes, it is. But that is an ideal market research. You know that houses are expensive there.
Trust God.
However, that location also has very strong market. It has very strong rental market. Are you with me? It has very strong rental market. It has very, very strong appreciation. So if you buy a house there, let's say, for example, in that particular area you research, it might be expensive, but you might see somebody that will rent that house the next day. So all those things we need to understand. Determine how much you have as by your budget. Okay, it's very important to starting, investing in real estate. If you don't have any budget, how much budget can you get? That is another way, right? And we also mentioned, if I have 25,000 budget, do I have 4 other people or 5 other people that have $25,000 budget? Making it how much? $125,000. So that is how you can get started in real estate. Work with experienced experts. Very, very important. Okay. You have to work with all these experienced experts because they will be the one that will guide you. Our experience that we will share with you will allow you to avoid costly mistakes that may cost you thousands or that may even cost you the whole of your investment. Right? Let me tell you, I must be sincere with you. Yes, work with experienced people, let them guide you through so that you won't make a silly mistake. There was a time, I want to share this type of information with you. There are sometimes that people make mistakes when they are investing in real estate. They want to do it by themselves. Let's say they make a mistake and there is something that is wrong in the house, which they bought, right? And then if they have consulted an home inspector, for example, just as an example, if you have used an home inspector to inspect that house before you bought the house, probably the home inspector will have cost you about $300. You hear me? Just $300. But because you don't have the right and experienced expert by your side, you went to buy that house. After you finish buying the house, you move into the house and then you notice something, yes. And then you will be surprised that you need 30,000. Did you hear me? 30,000 easily to fix that thing in the house, right? So that is very important that you should have in mind as you start your real estate investment journey. So let's talk about, what does investment in real estate mean? Well, before we talk about that, because this is a financial educational platform, there are 2 types of real estate investment. Okay, so that we are all on the same page. There are 2 major types of real estate investment. We have what we call the direct real estate investment. What is this? Direct real estate investment is when you and I own a legal title. Okay, what do I call it? A legal title to a single family home, a vacation home, apartment, or even a land, okay, or apartment property. That is direct real estate investing. Okay, you own a physical asset. Okay, the second type of real estate investment, because a lot of people ask this question, I want to invest in real estate. How can I do it? What are my options? I have $100. Can I invest in real estate? Yes. Okay. But of course, $100 cannot buy a condo in downtown, right? But it can buy a share in real estate called the real estate investment trust. So let's go to the second type of real estate investment. The second way you can invest in real estate is indirect real estate investment. What does this mean? Indirect real estate is you being a trustee and hold legal title on behalf of investors. So this means that you or somebody else, you are just trustees, or you are an investor and you are giving somebody your money that invests in real estate investment. Okay, Again, indirect real estate investment is you are giving out your money to a trustee that owns the legal title, okay, to that real estate. But guess what? It won't be only you, because probably your money will not be the total amount of money they use to purchase that skyscraper in downtown, that or those big apartments, right, which are real estate. So it will be a combination of many investors. Okay. So an example of those people that do indirect real estate investment are real estate investment trust companies. You must have heard about them before. They call them REIT. Okay. There are still other types. There are some that they call limited partnership. Okay. Limited partnership means I and Mr. Texman Warren, let's say the whole Gemfm family, we decide to form a partnership. Probably we are even 20, right? And we said, we want to invest in real estate, but Texman Warren says, as you know, I don't want to deal so much about finance, okay? But I want to invest in real estate, and this is the amount I want to invest in real estate. I trust Timothy. Timothy is very experienced in real estate. We have a legal cooperation that binds us together. We are just using him to hold the title, or for the company to hold the title, whichever way. So that is real estate limited partnership or real estate syndicates. Okay. Also, indirectly, some people, you can invest in real estate. It's good to mention this, by borrowing some people the money to invest, to buy houses. Okay. These are called high risk mortgages, right? Because you are a private lender. They call them private lenders, right? You have your money in your bank account and you give it to somebody to buy a house. But you may wonder, yes, you are giving it to them, but you are not just giving it to them on their words, right? It is a secured loan. So you are giving it to them. There's a lawyer that is writing the agreement. There's a lawyer that is signing that if they don't pay you back the money, you have a right to the asset, okay? So the reason why I want to explain, I'm explaining this very well, is that, as I said, they are very foundational. A lot of people will be asking, how can I invest in real estate? Yes, you can invest in real estate by buying the property, physical property, and you can also invest in real estate by limited partnership, by real estate investment trust. REITs are mostly like you buying mutual funds. So you're going to buy like a share, and that share represents your number of investment that you had in that in the investment types, like commercial real estate, like office building, warehouse, hospitals, hotels, you know, and so on and so forth. So you will buy those like shares, and those shares are used for your investment that everybody put together like a mutual fund, and they use it to build an hotel, or they use it to build commercial buildings, right? So those are the different types of real estate investing: direct real estate investing and indirect real estate investing. If you have any question at any point in time, please feel free to reach out. Okay. So why do you want to invest in real estate? Okay. Well, real estate investing has been in existence for a very long time. And there are several other places you can stick your money today, right? And that is pretty much obvious. A lot of people have asked, should I buy stocks? Should I buy bonds? You know, should I buy Bitcoin? You know, should I put my money in in a savings account or a GIC and so on and so forth. Definitely, there are so many places you can stick your money today, except in one place. Okay? Do you want to know where you can't stick your money? Absolutely, you can't stick your money under your pillows. Okay, so you have to put your money, and by the way, that's just a joke, but it means that you have to put your money in a place where it's working for you. Don't forget, if you don't take anything out of most of our presentation, one thing you should definitely know and never forget is that we encourage you to make sure that your money is working for you. That is the only means. We don't discourage you not to work hard. We don't discourage you not to do any other thing, but we want your money to work for you. So you don't have the option to put your money, stick your money under the pillow. You have to put it somewhere else. However, if we look at this chart, there are some investments that are actually very low risk. Okay. And there are some investments that are very high risk. Okay, so let's look at it. Real estate versus other assets. How do we want to compare? All right, take a look at bonds and certificates. Okay, so a lot of us know what bonds are. You know, bonds are fixed income instruments. Okay, that are, that are a loan to the investor. So when you buy a bond, you are buying a fixed income instrument. You will be paid some specific interest rate. Okay, is it a good form of investment? Yes, they are a good form of investment because you may not risk, you are not having so much risk, it's very low risk, and you are going to get some interest rate in return. But if I may ask, if you are getting an interest rate of 5% from your bond today, do you think it is enough growth for your investment and for you to prepare for your retirement? Textman Warren, the big answer is no. And the reason is that the rate of inflation currently in Canada is now between 5 and 7%. So you can't do that. Okay, so you better know where you want to keep your money, in the bonds or certificates of deposit, which basically are fixed income certificates. So one of the characteristics of bond is that they have low rate of returns. So if you look at inflation and your taxes, you may want to think about investing in real estate. Mutual funds. Mutual funds are companies that create a pool of money from investors. So it's called mutual funding. They invest in different securities, right? That is one thing about it. So there's some form of diversification. They invest in stock, they even invest in bonds. So they might say that 50% of your investment goes to stock and 25% of your investment goes to bond and 25% goes to short-term debts, and so on and so forth. Okay, so the combination of all these fundings, of all these different investment types within your mutual funds, from the pool of money from everybody, constitute what we call a portfolio. So a mutual fund, we have a portfolio, and the portfolio will tell you exactly what your money is being used for. Well, there have been several Canadians and other people that invest in mutual funds. However, one of the disadvantages why we think real estate is a much more superior investment is that its mutual fund often underperforms the market. Do you want to know why it underperforms the market? You have to see us. We have to talk in details, but let us give you an idea. One of the reasons is that there is usually a charge by the fund managers. Okay. So let's say you are lucky to get 7% for your mutual funds, 7%. However, inflation is 5%. And the people that manage that fund said, we are going to get an interest of 2% from your money that you made, right, from your profit. Then how much do you have left? Then you are back to zero. So we are just giving you an example of why mutual funds sometimes underperforms the market. Okay, managed by somebody else. You see, I haven't said it, but do you see why what I just said before now? Do you see why this point solidifies it? It is managed by somebody else, by not you. So the problem is that you have to pay those people who are managing it. Okay, dividends are reinvested, not paid to the investor. So you only get your money out of mutual fund the day you want to close it. Okay, so those are the part of the reason why you want to be sure. But for example, if you buy a real estate, if you have a house, Texman Warren was asking me last week, you can always get money out of that house in form of equity. Okay, is that a good point? Very, very great. For bonds, if you compare real estate with bonds, you will see that real estate has even done 30%, you know, in the past year, and real estate rate of return continue to be very, very strong. As at this year, January, February, it is still above 15% in major cities in Canada. Okay, so that is a really, really superb rate of return. All right, let's look at stocks. A lot of people sometimes ask, what exactly is stock? I want to buy stocks. I want to invest in stocks. What exactly are you getting yourself into? Well, when you want to get a stock, it means that you are getting an equity investment that represents the ownership in a company. So you are buying part of a company. So as simple as this, if you want to buy the shares, okay, of, let's say, RBC, for example, and you go ahead and buy the shares of $100, it means that RBC as an entity today, you have $100 inside as part of owning RBC. Okay. All right. So they call them sometimes share equities. You know, you have an equity. You know, you have a stake in that business. Okay. So of course, if you have a stock in a company, of course, you have the right, you know, of receiving some dividends. Okay, you can receive some dividends if they pay out dividends. Let me repeat that. If you have a stock in a company, you have the opportunity to receive dividends from that company. Okay, they can pay you dividends. What about if the shares appreciates? Okay, you can sell the shares. You may be able to sell it at an higher price, and so on and so forth. And you can also have voting rights within the company. Okay, so let's look at some of the reasons why you may want to consider real estate versus stock. Okay, the first reason is stocks are highly volatile investment. Okay, what does this mean? This means that the equity you have in that company can drop very, very high. There is no guarantee that your money will remain where it is. And guess what? If you invest in stock, your money can grow from $1 million to $0 easily. All it takes is let the company fail. Okay. Let me share an example of why stocks can be very, very volatile. Okay. One of the reasons is the company can get into lawsuits, okay, that can be very, very, very costly. One of the examples of the companies that a lot of people know called Boeing. Boeing is one of the American airspace and airplane companies. Aero got into a lot of suits in some years ago. Why? Because two of their aircraft failed because of some design issues, right? Just sharing that example, when the company was finally discovered to have made a mistake and probably even lied to the American airspace governing bodies, they were sued and they paid fines in billions of dollars. Okay, so your stocks in that company can easily go away. Finally, there is no leverage. Okay, what does that mean? You want to buy a shares from RBC, okay? It is $100 per shares, and you want to buy 10 shares. How much are you going to pay? You are going to pay 100 times $10 times 10, right? That is $1,000. You cannot buy a shares of $1,000 for $100, right? But you can buy a house of $500,000 with what? With 50,000. Okay, no leverage when you buy stock. Why do you want to invest in real estate? As we wrap up for today. One, build long-term wealth. When you buy a house, when you stay in the house, when you buy houses and when you buy properties, when you are passing away, you give it to your children. You pass it on to the next generation. And then the house you bought for $500,000 in 50 years might have worth $5 million. Okay. And let's say, you have a grandchild called Timothy, and I woke up one morning and I said, oh my God, I have a great idea. I want to open this big company. If I can open this big company, I can make a fortune for my family, but I need $5 million to open that company, right? Is it a good investment? Yes, it's a good investment, but how will Timothy find $5 million? Let's say that his grandparents have a house that they inherited for $5 million and they sell that house, right? Then that wealth will continue in the family. Real estate outperforms most asset classes. And if I add to that, yes, it outperforms them and it has a moderate risk in addition to that. So that's why we want to invest in real estate. Can be set it and forget it depending on the time. Let me talk about this a little bit. There are some form of real estate that are less stressful for you to set up and they take care of themselves. There are so many options that you can use to set it, forget it, and it will just continue to appreciate and make more money for you. If you want to know more, reach out to us, we will tell you, or you have to, continue to, come on our shows every Tuesday and Fridays, and you will see more and more of this strategy that will be discussed. Real estate has a very high leverage. I don't think I need to talk about that anymore. In fact, it has been said that real estate is one of the greatest leverage investment that you can ever find. And it's also one of the greatest tax deferred strategy, which we are going to talk about, that you can ever have, right? If you have a real estate and you take money out of that real estate and you pass it on to the next generation and you take that money out of that, more money out of that real estate, you can continue to do that without selling it and paying any taxes, right? So leverage is one of the biggest. And then the last thing is the secret of principal payback. Okay, so the truth is that when you have a real estate, it is possible for you to take out your money, okay? And when you take out your money, you can easily use that money to invest in other places, okay? So, and this is where we will be stopping for our real estate introduction part 1 today. Okay, don't forget, you want to invest in real estate because you want to build a long-term wealth, because it is a better investment for you in terms of comparing it to other assets. You can leverage a lot when you invest in real estate, and you can have an automatic investment to some level, which means it will run itself and it will pay you back your principal, okay, when you invest in real estate. Okay, so don't forget, you can always reach out to us. We will be more than happy to talk to you at any point in time. Our real estate team is always ready, and we will be there to answer any of your questions as related to financing, whether real estate is what you should be doing now. We can tell you whether you should be saving more, whether you should be looking at other investments. We will be surely very much transparent to tell you the next big step for you in your financial journey. Okay, so thank you, everybody. Thank you so much for your time. We appreciate it. We hope you found a little bit of nuggets. We try to make this is just only 4 slides or 5 slides. We want to make it very short. We don't want to have, long, then you don't even. So that is why we want to take our time to deep dive into this basics, right, before we get into the practicalities. So God bless you. Have a wonderful week all through. We will connect on Friday and we will talk more on real estate. Yeah, me.
I will let you know on Friday, because Friday is my birthday, so I don't know where I'm going to be.
Yes, I know that. Please let us know where we're going to be.
Yeah, so I will let you know in the morning. Yes?
Okay, are we setting up something somewhere?
I'm not too sure yet. Just I don't know what they want to do. And
okay, because I'm also available on Friday, so we will talk offline, no problem.
Yeah, we'll talk. Okay. All right. Okay, bye.
Thank you so much. Have a wonderful week.
Thank you. Bye-bye.
Yeah, bye.